Hello and welcome to Financial Technology Frontiers Live, to a wonderful conversation once again. And this time we are having a great insight into the world of wholesale payments and global payments. In this conversation of accelerating global payments, I have two wonderful guests with me. One is Adrian Brown and Mike Robertson, who are both the co-founders of a revolutionary FinTech called as AbbeyCross, and both are payment experts with a strong background in the world of international payments. Mike and Adrian, welcome to Banking Frontiers Live.
Thank you very much to have us. Wonderful to be here.
So great. Guys, let's get into some good conversation. When you are seeing the world of global payments, what are the most important things that you would like to highlight when it comes to the weaknesses in the area of global payments infrastructure and global payments?
Well, thank you very much. That's a great question. Adrian and I have been grappling with exactly this question for many years. In our previous careers, I ran the cross-border payments business at Bank of America for 9 years until April this year, when I left to found AbbeyCross with Adrian. And both of us have seen this problem. The answer to your question, the key issue which most people aren't aware of is that in the wholesale world of payments, i.e. the base layer payment is managed within the banking infrastructure, which ultimately all fintechs end up using anyway, because that's the nature of payments. If you look at the wholesale level, really there's this two-speed problem. All banks manage a specific pool of currencies, usually the most liquid currencies, themselves through their branch networks, and effect their payments through this branch network. And in this particular segment, a lot of efficiency exists, lots of market data points for pricing, and the costs are where they should be. And that's fine, that works just well. But there's the second segment, which most people aren't aware of, where all banks making payments globally for themselves or on behalf of their customers or clients ultimately have to outsource a specific group of currencies to specialist vendors. And most of them, if you look at the top 100 banks in the world, most of them, the vast majority, use just one vendor. And that's a problem, because ultimately the vendor does extend their reach. That's fantastic. But because the vendor gives you one price, take it or leave it, there's no competition. And that ultimately hurts the cost picture. So at the wholesale level, the cost of emerging market payments is not what it should be. The other issue here, of course, for the bank is that ultimately you need to prove to your regulator or to your authorities around you that you price your customers fairly. And you can only do that by taking your pricing, the point you price it, and compare it to an independent third-party data point. And that's typically Reuters or Bloomberg. In this situation, the price that they settle at, is, as I said, not in competition, but B, it invariably includes the cost of settlement, because the banks are buying the settlement service. That has no bearing on the price on Reuters or Bloomberg, which might be an NDF rate, it might be a composite rate, it might be just a hobbyist rate. And ultimately, comparing those two doesn't solve the problem, but banks are doing that.
Absolutely, Mike. That's a major problem that's not seen, because so much focus is on the G10 and G20 currencies where banks have branches and on their own correspondent networks, as you say. Outside of that, yeah, they usually only have one vendor.
So what do you see is the possible solution to this problem? And of course, when you solve this problem, the most important pillar also has to be the compliance factor, because you are dealing in international payments. So how do you A, make it agile, and B, at the same time ensure that you comply with the requirements of multi-regulators, because you are working with multiple countries and economies?
Well, let me answer the second question first. Ultimately, the key piece here is recognizing that these specialist vendors, as Adrian often says, they are specialists. They provide a very important service in the market, including understanding how their specific area works for a regulator. So banks are purchasing settlement, but they're also purchasing some of that knowledge when they take on a vendor. Now, obviously, one vendor doesn't have all those answers. So you can ultimately see having more vendors will change that question. So how does one access it? What's the solution to this problem? Well, the solution is AbbeyCross. It's a marketplace where ultimately all the demand, that's the banks making payments, integrate once, and all potential suppliers, of which there are many, many, it's a very rich list of suppliers, also integrate once. And in this single integration can show one another the prices and the demand for that particular service very easily. So we like to say, integrate once, trade with all. But ultimately, those vendors are specialists. The banks have compliance requirements. The vendors have compliance offerings in addition to their settlement, and they marry up on one platform, AbbeyCross.
How is your existing infrastructure that you have put together a bit different than what about the existing infrastructure which the banks currently use? How do you do it is something that will be a great interest to the bankers who are listening to us.
Sure. I mean, this is an area Adrian is focused on a lot, perhaps even more than me, but ultimately you can break it down into three distinctive areas. It's probably worth saying that the technology, the underlying technology isn't necessarily new technology. It's just a smarter use of existing tech. We don't necessarily need, excuse me, blockchain or distributed ledger to solve this sort of stuff. This is existing technology. And we're all aware in banking that trading systems, trading platforms, order execution platforms exist today. And so do settlement platforms. So ultimately what you're doing is joining these things together more smartly and making them, to the point Adrian likes to make, don't you, Adrian, that this is a payment-oriented platform. Do you want to perhaps pick on that? Because that's the part that doesn't exist today.
Yeah, you know, most of your sort of readers and viewers, Babu, will be well aware of the multi-dealer platforms out there. These revolutionized the FX market 20 years ago. It's unrecognizable today at wholesale FX to what it was 20 years ago. But this part of the market, both payments and emerging markets, were left behind. So there are these multi-dealer platforms out there. They tend to be used by banks and their corporate clients. They are for wholesale FX trading, and they don't handle the specificities of payments, because the key point of a payment is that it's not just an FX trade, but there is the settlement, as Mike says, which is the actual delivery of the purchased currency to a third-party beneficiary onshore. And the MDPs that exist today just don't handle this level of specificity. So that is probably the big change that we are making. As Mike says, we're using sort of existing trading technology. We are modifying it by probably 30% to handle the demands of the major payment banks and their suppliers out there.
And then integrating that via API, if you think about it, because ultimately all these large banks have existing real estate for trading and settlement on their services, and we're effectively adding to that layer through the intelligent use of APIs into their system.
Interesting. So what you're speaking is something about creating a mountain, and you need to lay the foundation by laying some bricks. You have to start somewhere, and this is a space where you have multiple vendors, multiple banks. So how far have you reached in this journey? How many vendors have you onboarded? What kind of banks have you engaged with? And where are you right now in this journey as of today?
So given our current geographies, I'm based in New York, Adrian's based in London, and our experience in our careers, we naturally start with America and the UK. So we are working currently we have letters of intent with 7 banks, 4 are US based, 2 are UK based, and 1 is in Singapore. They're all working with us as pilot entities. We also have onboarded 5 of the key suppliers, not yet the main supplier, ironically, because that supplier feels perhaps the most stress about this. But we're also talking to a further dozen suppliers, some names that you will be familiar with, who like this idea and are currently working with us around the actual documentation before onboarding. So we feel good about the traction we have with suppliers. We're already showing the 7 banks I mentioned, the pricing panels for market data recognition. And they love that. They're already seeing that. In fact, that's what's being onboarded. The first product I think Adrian mentioned was the market data product, where we're really defining this particular market for banks and saying, let's benchmark your pricing into the market that's outsourced settlement, because that's what the market is. It's not a Reuters number. And that's ultimately where we are with that. So the journey is good. The traction's there. We get a lot more, as we become more well known through conversations like this. We get a lot more inbound conversation now from suppliers in particular, and more recently starting to get a lot more banking interest coming into us as well, as they learn about what the problem is, and B, what the solution could be.
It's probably worth adding there, Babu, that the sort of take up that Mike's just described, it's not just been fantastic, but it's been almost immediate. And I think what that shows is just how acutely aware the banks are themselves of the problem, how frustrated they are by the problem, and how keen they are to work with a third party like us and each other to some extent to fix this problem. And they're not just fixing the problem for themselves, but they're fixing it for their clients, and their clients' beneficiaries.
Interesting. And amongst the banks whom you target, what are the kind of functionaries within the bank whom you target to have conversations related to this, so that the action may be much more faster and streamlined?
Yeah, we find that the most productive engagements include probably three groups within a bank. Certainly senior people in the trading facility, the markets area, who understand their FX for payments. Not all of them do, by the way. A lot of FX people are very focused in the more traditional end of FX trading, where the vast majority of their flow actually is. That's normal. But certainly people who understand FX for payments in the markets is an important conversation. The second conversation is, of course, your transaction services, your GTS, global transaction services, that part of the business where the payment is managed through the channel. That's an important conversation. And that takes you into settlement, which is an important piece of this. And then I would say the third part really is your supervisory or your support function, where ultimately the fact that your data is not fit for purpose, where regulators are concerned, is a concern. And when you shine a light on that and demonstrate where the problem is with this lack of transparency, that makes a significant difference. So those three groups are important in a conversation for us.
Wonderful. I think we have had a great insight into how banks can accelerate their payment with this interesting and innovative infrastructure that you are bringing into the entire banking ecosystem. We wish you all the best in taking this forward and accelerating the global payment systems very swiftly in the years to come. Thank you very much for being a part of this conversation, and we look forward to more such conversations with you once you are entering into your A series and B series of funding and newer realms of growth, and maybe becoming a unicorn as fast as possible. Thank you very much.
Thanks, Babu.
Thank you, Babu. Appreciate your time and the attention here, and that of the audience as well.